Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our weekly recap for October 29th through November 2nd, 2018. We're going to go over last week's changes for the week, go over the 4 main indexes this week, the emerging markets, the stock futures, stocks that have been moving in the after hours, then go over a few stocks that had either announced earnings or were on the news this week. A lot of the FANG stocks, Apple, General Electric, IBM, and such. Then we're going to go take a look at home builders, oil, the dollar, silver, gold, and bonds, and wrap it up there. We should not take longer than 10 or 15 minutes. So hopefully you guys do enjoy the video. If you do like it, give it a thumbs up button below. If you have any questions at any point, leave them in the comment section below. And of course, if you are brand new to my channel, I do make stock market, personal finance, and real estate investment videos every single week. So if you are interested in any of that, hit the subscribe button and then leave me a comment as to what you would like to see going forward. So last week's changes, October 22nd to the 26th, S&P 500 fell down nearly 4%, Dow Jones nearly 3%, the NASDAQ and the Russell 2000 fell down 3.78. Emerging markets did really well there, not falling as much as the other main indexes there. There was a huge buyback into the emerging markets there on Friday, as we had talked about in our last weekly recap. So this week, they actually came out ahead of all of our main indexes there. My portfolio fell down roughly 3.62% last week, and a lot of activity there, engagement there in that. Had some couple posts. So we talked about on Monday. Monday we came out, IBM announcement of they're going to deal for Red Hat. Ford was upgraded. General Electric had an article. There was an article discussing General Electric cutting or suspending their dividend. This was actually put out there at 2:27 p.m. on Monday. So in the after hours there slightly, but if you had got in on Monday morning and sold off that General Electric, if you saw what happened at General Electric here in the Tuesday, so if you had put in your sale there, you would have been able to sell it off. There was a huge sell off there in the early morning. You can see that little spike down, spike back up, and then huge sell up through the remainder of the day, down nearly 9% there, and they continue to sell off throughout the rest of the week, down a total of 17.79%. But interesting there, we kind of talked about that. Sector rotations, I know a couple sectors that I'm primarily focusing on. Still technology, I like my technology. I also like consumer staples, real estate, utilities, and healthcare. There's been a bit of a sector rotation. As of August, money has moved out of the market. It's beginning to move back in. We should begin to see the indexes in different sectors move higher. Specifically, just look for that. We went over our stocks going ex-dividend next week. A lot of these names were not very recognizable, so it wasn't a very liked video. It was liked, but it wasn't very watched, very much watched there. General Electric coming out, cutting their dividend to a penny. Wow. Now they can say they've continued to pay out their dividend for 100 years, even though they've basically cut it down to nothing. So it was hammered on Tuesday, losing nearly 9% of its equity there. Here we were just kind of discussing, I don't know what I was talking about here. Maybe a plan. Oh, we were talking about outstanding. So somebody had mentioned that stock, I mentioned the stock price shouldn't matter. You should look at, someone had talked about stock splits. I don't know what I was talking about there. I think I was kind of rambling on there, sort of like I am in the video. So Wednesday, we were looking at stock futures. I was talking with another investor here on chat, and we're taking a look at stock futures going into Thursday. Wednesday, everything in the after hours is currently very positive, as they are currently now on Friday, as we'll see here in just a minute. WP Carey completing their merger with CPA. Not a whole lot of change there. October is over, so my portfolio down 5.27% during the month of October. S&P 500 down 7.18, Dow Jones 7.76, NASDAQ down 8.78, the Russell 2000 down 9.7, and the emerging markets down 8.76. I'm glad that October ended before Apple announced that their earnings. Otherwise, I believe I would have been hammered just along with everything else. Well, I got hammered a little bit harder this week than everyone else. So big news going into 2019. They're going to be raising the contribution limit for IRA, Roth IRA from $5,500 to now $6,000, and for all those with 401, 403, 457 TSP plans, it's going $18,500 to now $19,000. I still agree. If you have a match at work, go ahead and contribute towards your 401k, Roth 401k towards the match, everything extra towards a Roth IRA, and then everything after that towards either your business or a taxable account. But locking up stuff in a 401k over the match, it's very hard to move that money without getting penalized. Even if you borrow against it, it just doesn't work out that way. So end of October results. So bit of a beating. Yeah, I took a bit of a beating during October. Portfolio was down. M1 Finance portfolio was down 5.83%. That's not just the entire portfolio that we track. So here, October lowered us down by 5.83. We can see here that October for the month, our total portfolio, like everything that I'm tracking, down 5.27. That includes the individual account, the Roth IRA, my thrift savings plan, my IRA, my Roth 401k, my Roth IRA. So there's the combination of accounts in there that I track as far as all of our portfolios. So Apple goes on sale after announcing earnings. Basically, they beat expectations, they beat revenue, but their phone sales were down. So everybody made a huge deal about that. Even though Apple is such a, it's a long-term outlook. They're moving and building their services sector higher. Their phone sales were the main driving factor, I suppose, here, driving the stock down nearly 6% and some change. And Friday, 6% and some change. So I did end up doing some moves here. We'll discuss that here in a minute. So CD Marcus over at Goldman Sachs by Marcus by Goldman Sachs, announced that they're going to be doing a 2.15% no penalty CD, meaning you put the money in, it can last up into there for the next 13 months at that rate. But after 7 days, if you'd like to transfer and move that money back out, you can at no penalty to you, no questions or anything. So kind of interesting. I currently have some money over at Marcus getting a 1.9%, and I have a whole calculator here if you guys want to check that out. If you start off with $10,000, 3 to 6 months worth of however much money you would need to use. If you spend $3,000 per month, that could last you 3 months. If you spend $1,500 per month, that could last you 6 months. So I like to keep a good amount in there. My wife feels happy. So here is the chart if you want to do it for the high yield savings. Here's the chart if you want to do it for certificate or deposit. If you want to have this as your own, you can go to File and then make a copy on your own Google Drive. Then you guys can edit as you guys would like. So that is available there free. I made a new app called the Simple Retirement Calculator. Put that out on the Google Play Store completely free. Made a video about it, how you could use it, take advantage of it. It gives you a plan to retire with your number. However much you want to get paid in retirement, it gives you a plan to deposit weekly, monthly, yearly. Happy Friday. So Friday, I sold off Apple a couple weeks ago, maybe a month or so ago at, let's see here, $215.50, somewhere in that range. And I bought Berkshire Hathaway after it had been hammered 18% or 8%. And today I sold off my Berkshire Hathaway at a gain there of 1 or 2%. I rebought Apple at $207.30. So I sold off 15 shares of Berkshire, bought back in 15 shares of Apple. So I got a nice discount per share there of $6.25. And they're going to be going ex-dividend here in the next week or two. So that's just more dividends coming in to my portfolio. Praxair, Lindell completed their merger. Lindy completed their merger. They're under the new ticker symbol LIN. I know that updated in my portfolio. Went over a quick snippet. This is just ad mobs. If you guys have any apps out there, I make roughly anywhere from $15 to $20 per month off one app. So I'm trying to put out at least 5 apps and just kind of build the base around them. They only have a couple hundred users on the one, but I'm trying to build up more financial apps. So if you guys have any suggestions on financial apps you would like to see on the Google Play Store, I'm also going to be buying a Apple license, an iOS license. It only lasts up to a year. I think it's fairly expensive for what they offer, but I think I'd like to get a couple, once I get 5 applications out there, probably roll out the iOS license. It'll double, it'll pay itself back within a month. So this week's changes for October 29th through the 2nd, we'll discuss here in a minute. My biggest winners were Stanley Black & Decker up 12.73%, Caterpillar up 9.33%. My biggest losers were Apple down 4.08, and Lindell down 3.09. So it was still a good week. I didn't move as high as all the other indexes here. This is all mainly due to Apple losing me 6%, and it makes up a good portion of my portfolio. So S&P 500 this week went up 2.42%, year-to-date back in the green, up 1.85%. The Dow Jones up 2.36% this week, up again for the year, up 2.33. The NASDAQ up 2.65, year-to-date up 6.57. This is our winner year-to-date. The Russell 2000 beat out the S&P, Dow Jones, and the NASDAQ at a 5-day change of 4.32. Year-to-date only up 0.81. Now the winner here, emerging markets, as we discussed last week on Friday, a huge buy-in into the emerging markets at that $38 point. So last week, $38 point, lots of movement going into the emerging markets. This week, as it started off low on Monday, hit that $38 point, got back in, got bought back up. And now the emerging markets here is up 5.56% in a single week. Year to date down 13.37. We may see more money going into the emerging markets. You can see a big inflow there of cash moving into the emerging markets, as it has been hammered here year to date, and just for quite a while. Not only year to date, but if we look at the total outlook here for over the last 3 years, we can see here if this thing would like to load. So here's our 3 years. Okay, so it looks like as of 2018, it kind of peaked out there and has gone nowhere else but down. So $34 point is the emerging market. So currently stock futures are looking very positive. S&P 500 up nearly 2% here. NASDAQ up 3.5%. Dow Jones up nearly 2%. So Monday, it's a good opportunity to buy low, sell high. In this case, you may be buying into Monday a little bit higher in the morning hours, but we'll see if it sells off here in the morning and then kind of picks up towards the afternoon. But we shall see here. Some of the most active stocks here in the after hours. We have some of the big ones here. AMD up 6.9, Coca-Cola up 2.9, Wendy's Co. up 0.58 or 5.9, Cisco up 0.48. CenturyLink, that's an interesting one. Man, I remember when I owned that. I bought that at $13, $14. Now it's $21. Interesting there, up 1.24%. Apple did go down here in the after hours, an additional 0.47% there in the after hours. So still continuing to sell off there. It is at $206.50. So General Electric this week, we kind of already hammered that one down. Monday article came out saying they may cut their dividend on Tuesday down to a penny. Sold off the remainder of the week, down 17.79, year to date down 46.76%. A lot of people are looking at it like, hey, should I still buy it? And it's not a dividend growth investment. It's not a DJI anymore. It's not a dividend growth stock. It's not even a dividend stock anymore. It's just, hey, I got to recover somehow. Let's cut our dividend and see if we can make it back and become profitable. So IBM announcement of Red Hat doesn't do so well when you announce that you're going to be trying to make a deal and acquire other companies. Look at AT&T, look at Disney, look at Comcast. Whenever they made a deal of some sort where they're going to be going out and purchasing, that's money that they're going to be paying out to acquire something. That's more debt. So IBM here sold off for the week, 7.31% down. Year to date, 224.61. IBM Yield currently sits around a 5.5, and they're going ex-dividend next week at $1.57 per share. I know a lot of people are looking at this. Dividend investors have been buying into this one on the dividend Facebook groups, and also over on YouTube. I know Ian over at PPC Ian, he's buying into IBM as well. Could be an interesting one. I don't see any sort of. I think this is going to go more sour than positive for them, as they're acquiring Red Hat at a terrible valuation. I think it's overpriced. We talked about this in our teams at work. Our solutions team, they do mainly database. They don't think it was a good acquisition for IBM, but we'll see how it kind of plays out. I don't really deal in that whole realm of database. I work in infrastructure, so I'm more of a network solutions kind of guy. So this is a little bit outside. This is more of the cloud. I'll leave that up to Microsoft and Amazon to deal with that cloud base. I don't see IBM coming in there and really competing against them and trying to take market share away from them. Facebook down 5-day. It's actually up 5-day, right? Yeah, 3.43% for the 5-day. I'm actually looking at Facebook. I may pick up some Facebook if it drops down next week. Who knows? If it goes up next week, who knows? But I would like to maybe take a small position in Facebook, add a couple shares there. I think it's at a good point, and they really haven't taken advantage of the Instagram platform, and they really need to. I see a lot of people moving from Snapchat over to Instagram, sharing their stories. My wife's always on Instagram these days, posting her pictures and such. And I think once they get the platform situated, I know they were doing that Instagram live and trying to do, what YouTube does. I think there's a lot of potential there. So I may end up adding some Facebook to one of our portfolios somewhere. I already have it in my Roth IRA. I have some Facebook there, but that's just in an ETF, fund. So I don't discuss it as a single stock allocation. Amazon, recovering off those lows, up 1.38% this week. Up year to date, 42.42. Apple got hammered on Friday after announcing, their phone sales. Oh, they are going ex-dividend next week. So on the 8th, which is next Thursday, you got to buy this one on Wednesday or prior. I'm up at 46 shares of Apple now, and they're going to be paying out 73 cents per share for Apple. So a very interesting price. Remember, it's not $207.48. It's actually $206.50 after the sell-off here. Netflix up 3.09%. There's a lot of deals out there. I think, Apple's at a great deal. I think Facebook's at a great deal. I don't really like IBM or General Electric as a whole. I think they still have some things to kind of work out and become better. Netflix up 3.09, year to date up 61.02. Microsoft also looking pretty good here at a 5-day up. Oh, they're down 0.75% 5-day. Year to date up 24.11. Microsoft is always going pretty well. Very not so much niche, but everyone uses them. Like every business has some sort of, they have to have Windows or servers and Windows programs. So Alphabet, Google down 1.13, continuing on their downwards trend here. I see a lot of investors discussing picking it up at 950. I don't know if they'll hit 950, but we shall see. Not too much of a loss there until 950. That would put them at negative year to date. Currently up 1.72 year to date. Tesla, even after last week's gigantic rush up of 20-some%, Tesla is continuing to move higher, up 4.69%. I believe Tesla's going to be coming back. I think Tesla's an interesting stock too. I don't know if I would pick it up at 350, but I've kind of turned my head around. I used to own Tesla back in 2014, 2015, maybe in that 150 price range, and I sold it at, $200, $300, somewhere in that range. It was a good stock, and the way I looked at it, I used to work at Lithia. That was one of my new jobs coming out of the military. I worked at Lithia, and between our sales, our service, our parts department, service made all the money. If service went down, that was people, bringing their vehicles in that could not get serviced. And that's where all your money is. You would think it would be sales when they're selling off these cars, but they only make a couple $1,000s per vehicle sale. So, after the customers can usually shimmer that sales price down, say, hey, you kind of go with the sales guy and you kind of wiggle on the price. They're trying to get their commission and stuff, and the company's got to make their money, but most of their money is all from sales and parts, because that's just, there's nothing there that they have to measure down. Like those prices are set, and it's just a service that's done and marked up in hours and such. So Tesla, in the future, it's not only a sales where they're selling vehicles. I also see it as parts service department in the future, as people's cars are coming off warranties. That's going to be, providing them cash. So interesting there. Just my perspective. Home builders up 7.27% this week. Very interesting. Lowe's, Home Depot, Williams-Sonoma there, Whirlpool. Lots of companies here. I believe Home Depot and Lowe's did really well this week, up 3.24%. And Home Depot up 4.47% this week. So overall, home builders up jumping very nicely. Year to date still down 21.07, but this one interesting. We can see a lot of inflow here on Tuesday and Wednesday, moving the stock higher. We already talked about Home Depot, Lowe's. So oil this week, let's take a look at November here. We can take a look at the end of October. This is still end of October on the 29th. So Oil prices dropped here. So oil prices basically dropped throughout the entire week. You know, Exxon did a really good play. They held, down. I don't look at Exxon right now, but I saw an article coming out where Exxon really cashed in on the increase of oil prices there. But oil is beginning to have a bit of a pullback now, down 7.12%. And this is a very interesting page. This goes over everything that goes on oil. So here, financial markets plunged, driving the strength early this week. Let's see here. What's the main points here? So oil prices slid on Tuesday, unhappy by concerns that the U.S.-China trade dispute will dent economic growth and by signs of rising global supply despite upcoming sanctions against Iran. Oil prices dropped again, mid-election evidence of rising global crude supply. So supply is going up. Demand goes down as supply goes up. Losses were limited by signs of strong U.S. demand for fuel. Yeah, there's always demand for fuel there in the state. So September here. You can go ahead and pause the video. I'm going to go ahead and just move up, pause the video. If you guys would like to read that for the week, that'll give you basically a snippet of why oil trailed down this week by 7.12%. I think it'll just continue to go and continue on there, trailing down a little bit further. It was up nearly, 25% not too long ago. Dollar continued to get stronger here, 5-day change, up. Oh, it came down almost. So it started the week at 96.39, ended it at 36.50. So slight increase there, but I know, people are talking about the dollar stronger. As the dollar gets stronger, it gets more expensive to pay it back. Stronger dollar means you're paying it back at a stronger point. So as that, and a lot of these companies, there's a bunch of stuff that's taken into consideration. I won't go over it all because I won't say that I completely understand it all, but I know as the dollar rises, the stocks, that drags the stocks down because it causes debt to get more expensive. As these companies have so much debt on their balance sheets, such as Ibm and such, it hurts them in the end. So silver moving higher, even though the market, so it's kind of the opposite. You see the markets doing really well. You see the dollar doing really well. Where's the dollar? Where'd you go? Dollar is moving higher, but silver and gold either stayed flat or silver moved higher. Interesting increase there in the after hours. I don't know what came out there. I don't track the daily plays for silver, but huge buy in there. Not even a lot of buy, not a lot of activity, but at that $13.40 point, rebounded there very quickly. So gold shares up, down 0.10. No, not a huge change there. So bonds continuing to move further down 0.87 this week. Year to date down 5%. Bonds here. We're taking a look at the 10-year. It went up from last week. So last week it was right in that 3.12, 3.14. Bond rates are moving, bond is at a 3.2 currently. So interesting. I know we went over our prime rates. I know at work, we went over the new rate changes. Not a lot of rate changes there for the month. So kind of interesting. We are still expecting an increase in December of another quarter. So that will put the prime rate at 5.5%. So if you're looking to get HELOCs, you're going to be looking at a 5.6 to 6% range. Investment properties may jump into that 6% range of interest rate. So that is basically it. That is a long video, 23 minutes, guys. So I'm sorry it took so long. Hopefully you guys have enjoyed the video. If you guys did like it, give it a thumbs up button below. If you are brand new to my channel, I do make stock market, personal finance, and real estate investment videos every single week. As a quick disclaimer, I'm not any sort of financial advisor, tax professional of any sorts. So this video is for fun and entertainment. If you guys did enjoy it, hit that thumbs up button below. And I will see you next week. If you guys have any comments, questions, leave them in the comment section below or write me over on Facebook. If you have any suggestions for applications you would like to see on the Google Play Store, the iPhones, the iOS store, email me or write me, message me, and we can chat. So that is it. Thank you guys for tuning in. I will see you next time. Have a great day. Bye.